Hey YouTube, what's going on? Chris here. Want to bring you all an update of something I was doing some studying on. I was in my car. And what I want to talk about today was the reliability of flag patterns and pennant patterns. And what we're going to look at these as basically is one of the best chart patterns that you can use for Litecoin or Bitcoin or Ethereum or any of these. Guys, the bull flag or basically the bull pennant is one of the best things that you can do in terms of trying to capture percentage gains. It's one of the best. So I wanted to bring this to you all. If you like these little updates from my car where I'm just going through some of the stuff that I'm reading and trying to learn about, I want to share it with as many people as I can. So let me know down below, guys. Like, subscribe, hit that notification bell. I'm going to try to get back to some comments today. It's been a while since I've been able to do that. I was a groomsman in a wedding, so just a lot going on the past week. We had bachelor party and all different types of stuff. So I'm going to try to get this video out today and maybe one more where we're covering Bitcoin, Litecoin, some of those different coins. You know, XRP, we'll get into all that technical analysis, but I just wanted to bring this to you while I had a chance while I was studying in the car here. So what it says in this book that I'm reading out of, guys, it is the 7th edition of Technical Analysis of Stock Trends. It's by Robert D. Edwards. And it says the reliability of flags and chart patterns. The number one rule that you need to understand. Number one, the consolidation flag or pennant should occur after a straight line move. So what this is talking about is, you'll see this in Bitcoin a lot. We'll have a huge blast of volume. You'll basically go straight up. And what they're talking about is you have to have that mass, that pull. And then what's going to happen is for the next week, up to 4 weeks, you're going to slowly decline and volume's going to start going down until you have that next measured move up. And guys, a lot of the times that next move that you extrapolate is going to be the same height as what that pull was. So you can really, almost double your money in terms of if you can catch one of these moves. They're very powerful, guys. They can run up to 60%, 100% some of the time. So it's one you really want to pay attention to. Number two, activity should diminish appreciably and consistently during the pattern's construction and continue to decline until the price breaks away from it. So that's what they're talking about. You go straight up, guys, and then you're going to have that week up to 4 weeks where you're just slowly going down. Price is slowly going down before you have that next blast up. Number three, prices should break away in the expected direction in not more than 4 weeks. So if it's past 4 weeks, then most likely it's not one of these bull flags or pennants. So that's very important for us to pay attention to, the actual duration of that consolidation period that we're going to have. A pattern of this type, which extends beyond 3 weeks, should be watched very carefully, is what this book says. Number two, and this is just talking about the number two part here, guys, but our test number two deserves some further comments here. If a pattern begins to develop on a chart which so far as the price picture alone is concerned qualifies as a flag or a pattern, but during which trading volume remains high or obviously irregular instead of diminishing, the outcome is more apt to be a quick reaction against rather than continuation of the previous trend. So what they're talking about is you have this huge pull, that huge mass that we were talking about where you go straight up. And what they're saying is if you don't have that diminishing volume as the price goes down for that consolidation, if it's still irregular, it's really high after we made that move, then most likely it's not one of these bull flags. And that's something you're really going to have to look at, that the trend may be changing if the volume's irregular and it's not really drying up. We really want it to be dried up. And then it says where they may be expected. Flag and pennant consolidations are characteristics of fast moves. Therefore, they show up most frequently in the later dynamic phase of bull market. So this is something that's really important for us to pay attention to as Bitcoin continues to make moves here. And the longer that we stay in a bull market, just overall, guys, you're going to see more of these take place. So it says phase of the bull market, hence the appearance of these patterns may be taken as a warning that an advance is approaching in the final weeks. The rapid phase of a major bear trend, on the other hand, is its second stage, often characterized by almost vertical panic drop declines. The flags and pennants which develop therein are usually short, completed in a matter of 3 to 4 days rather than weeks. In the late months of a bear market, formations which evolve on the charts in a flag or pennant simulate often will run too long, 4 weeks or more, begin to show an increase in volume on the rallies and be succeeded by only dull and limited reactions. In general, it may be said that these particular chart patterns are most common and most dependable in uptrend. So you really want to look for them when you've already been in some type of an uptrend. You don't want to look for these on a reaction in a downtrend or in a bear market. You're not going to really look for these bull flags in that little reaction that you get. Because remember, guys, in a downtrend, you're having lower highs and lower lows, so you're always going to have that little reaction move that comes up. And they're saying you're not going to really see many of these bull flags in that. It's more so for bull markets in that later stage of it, when you're really starting to get vertical, prices pushing up, there's hysteria. That's where you're going to see this type of stuff. And if you can capitalize on it, guys, it can really be beneficial for you. So remember that big masked up, decreasing volume. You want it to be less than 4 weeks, and then you're going to have that next blast up. And a lot of times it'll be actually as high as that initial blast up that you had, or that pull, or that mass that we were looking at. So if you get something out of these, guys, like, subscribe, hit that notification bell, let me know down low. Like I said, I want to take as many people as I can with me. I love learning this stuff. Anytime I can get just a second here. This was just a quick break in between clients. I ran into Walmart there, ran out and said, you know what, I still have 5 or 10 more minutes here. I'm going to make a video. I'm going to keep studying this stuff. I want to be one of the best in the world, and I want you guys to be one of the best in the world, and I want to take you along with me, all the people who really want to study and pay attention to this stuff. So let's do it, guys. Let's get this. God bless each and every one of you. Like and subscribe if you get something out of this. God bless.